So, hi everyone. I'm here with Chris Leslie today. He's the chief executive of the Credit Services Association, who looks after the collections industry, the credit and collections industry in the UK. Chris, thanks very much for joining me today. Really appreciate it.
No problem. Happy to do it.
I wanted to kick off just talking a little about perceptions in the credit and collections industry. And I know I was at your recent conference and we talked a little bit about that in terms of perceptions of it. And I know we were just chatting before how much has changed and how much far we've come along. I mean, what are your perceptions? So, especially when you first came in around what the industry is, what it does, versus what the reality is, and then where we sort of like be moving to.
Yeah. I mean, it's a strange thing because I think a lot of people naturally assume debt collection is that an area where it's sort of had a lot of history to it, and perhaps perceptions can be sometimes a little bit sort of negative. But actually, most of the general public understand that if you're going to have credit availability for the wider public, then anything that is lent out has to have some mechanism of being repaid and being collected. And it's a sort of cycle that is quite important for then future credit availability and future credit affordability. If you end up in a system which doesn't have a collection mechanism, then it'll only be prime individuals who ever get access to credit, and anything else than that will just be ridiculously expensive. And so most of the public intuitively do understand that and accept it. And of course, it has come on leaps and bounds over the last 30 years or so. A lot has changed because we've had certainly consumer credit regulation, the advent of the Financial Conduct Authority. And of course, as a trade body, we've got our code of practice, where pretty much most members of the industry are members of the CSA, because creditors are quite keen to show that this is an industry which has certain professional standards that need to be adhered to. And those are basically about making sure the sensitivity to people in vulnerable circumstances, people who've got financial difficulties, are given time and space to make repayments in an affordable way. And so the behaviors of the sector, actually, when most of the media scratch away the surface, they do see a sector that is relatively well behaved, and in terms of its governance, the sector tries, to go above and beyond to dispel a lot of those misconceptions that are there, because those misconceptions are around. So it's almost, and there's additional effort put in by those working in the sector to show that they are doing things with due care and attention.
I mean, the perceptions that there are, particularly around the collections industry, have always been of a certain, of a certain type, I suppose, and, not necessarily particularly positive. I mean, do you think, given the work that's happened, that it is changing? Because it does feel like say, when people look beneath the surface, you can sort of see the work that's happened. But actually, when I spend my time on social media, like all of us do, you do sort of see instances that happen, and you read the comments, and sort of like they can be pretty brutal, and they don't necessarily always tally up against what you might see actually when you go and see these processes.
And there is a frustration in the fact that, an anecdote here or a particular story there can sometimes be put up against the wall of evidence that suggests this is a profession that is very careful about how it works. I mean, the proof points, I guess, are, the uphold rate for complaints to the Financial Ombudsman Service are much lower than perhaps the rest of the financial services sector. Typically, that's been the case for recent years. In terms of volumes of complaints, those are also relatively limited, and that but is borne out also in the complaints that the public give to us as the trade body overseeing the code of practice as well. But you're right, sometimes there can be one or two stories that will pop up, and it's always can be fodder for media attention. We've done some polling. We do some opinion polling with the representative sample of the British public, and particularly look at those who, and it's not always a large number, who have come into contact with debt collection agencies in the past year. And we get pretty good feedback in terms of the levels of professionalism. I mean, there's a sort of question we ask: what is the perceived professionalism of the debt collection representatives that you've spoken to? And it's surprisingly high. Some people might say surprisingly high, because I think the public can ring up, or they'll have an interaction where they'll be nervous. They don't know what to expect. And then they often find somebody on the other end of the phone who's giving them time, going through their income and expenditure sort of situation, asking them income maximization and so forth, and then giving them options for rephasing, forbearance often in those cases. So they come off the phone actually feeling pleasantly surprised that they've done it. And it can be a great relief off their shoulders if both the collections agency and the individual are sort of working towards debt resolution. And that's why actually a lot of the people working in the sector in the front line can actually find it quite a satisfying occupation to work it, because it's very much about helping individuals get out of those problem situations.
Well, I've certainly seen that directly in terms of like almost like NPS score or customer feedback scores have actually been pretty high in the collections process because you're actually helping people solve a problem in quite a
Mm.
difficult time of their lives. And they can actually be quite rewarding in some ways, which I think is
Mm.
one of the great changes that happened with, the FCA consumer duty type, treating customers fairly type legislation that kind of came through.
Yeah.
But I suppose how do we sort of like, because we're up against almost like the dynamics between anecdotes and sort of like creating stories almost like in the general population or the media versus what the data might say, and particularly for the people who haven't necessarily experienced it as well. So it's almost like the fear of what might happen rather than what's actually happened for the people who's actually happened to.
Yeah.
How do we sort of like counteract that? Because it's almost like it's a media, public narrative type conversation as much as it is what the data might be saying, but it's very difficult to kind of battle against that.
Yes, and look, I mean, I'm not under any illusions in terms of will the media be applauding financial services, creditors, collections agencies in general? No, they're never going to go down that road. There'll always be a level of cynicism and judgments that are made about the sector. But I think with careful explanation when problems do pop up and come along, with a strong code of practice that we have, with good dialogue with the statutory regulators, I think we have been able to sort of close off a lot of the risks that can, or perhaps historically did before people. I mean, it is a very heavily regulated sector now, right? I mean, you mentioned the consumer duty. That's pretty all pervasive, certainly in the sort of consumer credit side of things. Where I think we really need to now start to focus is things like financial education and helping sort of raise the financial literacy of the public at large, so that they do understand what a debt is, how it can be sort of expunged or handled or managed over the course of their lives for different circumstances, and how actually there is good help available. There's lots of good free debt advice opportunities our sector signposts people towards and are available. But the key thing that I still don't think we are communicating enough, and I would want the regulators, Money and Pension Service, government, Treasury, doing much more on this front, is to promote engagement and dialogue with your creditor and collection agency. People are still frightened to pick up the phone, have the conversation. There's an ostrich sort of tendency, which is I'll stick my head in the sand, wait till it all blows over, or something will happen. I don't need to worry about these things right now. That's the real problem. I think our sector and others, we need to do much more to say, if you engage, you're going to solve these problems. That is the way to do it. And there's still not happening as much. And that's where I think we need to campaign for more activity.
Yeah, it's almost like it's the fear of contact of what might happen without actually saying, without having got there, which is kind of what the once you're in arrears or once you're talking with the sector, then sort of like people sort of like feel much more comfortable. And that's really what the data is kind of saying, isn't it? Versus that upfront sort of
Yes,
education.
and you think
kind of-
about, look at the statistics, even within our sector, there's a tiny proportion of individuals who, if they have gone to the trouble of having contact or reacting, and they do engage, the numbers who will then end up in litigation and enforcement of a tiny fraction. Often the litigation enforcement side are people who are, non-responding, moved or gone away, don't know well, have had no contact for a long period, and look as though there's an evasive pattern of behaviour. In which case, the creditor has little option but to go down an enforcement route. But it's very, very rare in circumstances where an individual's tried earnestly to have that dialogue with its creditor or collections agency.
This fear of engagement piece, and particularly fear of picking up the phone. I mean, how much do you think technology is going to play a part in that? And particularly when you look at your members, I mean,
Mm.
what are they kind of looking at around that? Because that's one potential way of sort of like reducing the barrier to picking up the phone. Certainly some of us, I mean, I can be like this, it's like, I don't really want to talk on the phone because it becomes a big thing where you don't want to take that first step, but sort of breaking into smaller steps, and digital
Yeah.
can kind of help with that. I mean, what's the feedback you get from your members on that? There's been a lot of talk.
Oh, I mean, there's a revolution going on right now. I mean, I'm sure we'll talk about artificial intelligence and the opportunities for dialogue and communications that are changing in so many different ways. There's a separate conversation to be had about other sectors, particularly public sector, and whether it keeps up with the private sector's approach on these things. But, some people tend to be an older demographic, prefer to have a conversation with a person where they feel they can connect and have that conversation and that level of understanding per human to human. I think there's a lot of firms who feel very important. That's something to preserve, and it's very important. There's another demographic that doesn't necessarily want that, whether that's because they feel slightly embarrassed about their circumstances, or they want to do it, as you say, offline or out of hours, overnight, whenever they feel they've got the paperwork in front of them and so forth. And so, whether it's via mobile phones, the sort of SMS side of things, or online, and even via email, that's read and interpreted, and triaged by AI, and then goes to a human sort of operator on the other side of things. Lots of new piloting of different communication channels going on across the sector. Yeah, I mean, I think there's a lot of other sectors could pick up a lot from some of the ease of access that our sector's doing.
Where do you think that's going to sort of take us? Do you think it's going to take us to richer conversations, maybe less conversations, more digital conversations, or is it just more volume that can be got through? Where do you think it's going to take the industry?
Well, I think the sort of typical pattern will be that less complex, more straightforward transactions, people just simply wanting to ring up and make a payment or vary a payment, will be able to be automated a lot more. And that frees up operators to pick up the phone quicker, to have more responsiveness, and to have more detailed specialist conversations about circumstances. And that's the ideal, so that you're not, I mean, I think we're living in a period of time where the level of frustration we have about clunky call center, the level of waiting, or dial 3 if you want this, or 4 if you want this. I mean, those older technologies are being supplanted by much more sophisticated and quicker systems. But it's essentially a story about separating out routine, non-complex cases from those that require extra thought and specificity.
Yeah. I mean, what does it do, for example, like legal cases as an example? I mean, the ability for me to be able to ask and get back legal examples as a result of AI, it's almost like it ups the bar and ups the skill level, and it becomes a superpower for me as a consumer to be able to ask much more detailed kind of questions. And then you need to almost answer that with AI as well, because you're being asked much more detailed questions. I mean, it becomes a bit of an arms race in terms of, I suppose, asking more and more detail. I mean, at what point does that kind of stop? And what point do we need to upskill ourselves? Because the customers are going to be way more informed, and they're going to be asking much more detailed questions, which may or may not be valid, but we need to give an answer to.
Yes. I mean, there's two different things there. I mean, it's not like going to see a consultant or a doctor where there's a sort of high degree of knowledge requirement in terms of, the options and the routes. Often these are simple transactional conversations or rephasing or settlements. And so they're not, I don't think there's a sort of arms race in terms of the complexity of dialogue that's going on. But there is a lot of misinformation out there, particularly on social media. There's a lot of people who get hoodwinked to think, oh, well, if I claim that I'm a freeman of the land, or I'm a sort of sovereign citizen, or whatever they call it, or I can pay in Bitcoin or dollars or whatever, then I can avoid doing it. I mean, you'd be amazed the amount of misinformation and disinformation that is out there. We're going to put out a bit of work at the CSA soon about that, and trying to look at saying, what can we do to sort of knock back some of those sort of misleading tactics and routes that are out there, because it's just wasting everybody's time. It's wasting the customer's time as well as the company's time. So you have to sort of, it's again, a lot of this is clear communication and convincing people that there is a simpler route out of their problem situation.
I suppose from an industry point of view is making sure there's good education around that, making sure you've got robust processes in place to really understand the details. So when these things come in, you can say,
Mm.
well, actually, I can see that might be written by AI, or it might be raising points, but then being confident that you've got good answers to then come back.
Yeah, I mean, currently, for example, there's a bit of a trend where, unfortunately, some customers are being persuaded that if they stick in subject access requests at great administrative cost, that somehow this is either going to result in compensation being paid, or will get the collections agency or creditor off their back. And so that's trying to sort of weaponize the information, the data protection and sort of arrangements and all those kind of things. And but there are ways around, cutting through that kind of thing. And a lot of firms are much, more averse now in saying, look, if you want to solve your situation, let's have a conversation about that. Though all these other noises off are just going to delay the resolution of your position. You'd be amazed how many. I mean, sadly, there are even companies out there that are taking sort of regular direct debit subscriptions from unsuspecting customers who are fooled to think that, oh, if I subscribe to this, then I can avoid my bigger debt. That's where we need some of the regulatory activity to go into.
Yeah. I mean, collections I always find is an interesting kind of point in the customer life cycle in terms of getting an idea around what's actually happening upstream, because often it's a consequence of what's actually happening in terms of like the lending cycle, but also the economy. And I mean, what are you hearing from your members around where we sit in that sort of like economic kind of cycle? I mean, you don't want more volume necessarily to come through, but you see some of the issues that customers could be having, life changes, economic challenges, quite keenly in this industry, right? So,
Yeah.
what are you kind of hearing?
Well, I mean, the British economy is in this slightly stasis position. It's not quite stagflation because there is a little bit of growth going on and things are ticking over, but it's not exactly stellar, boom time in the UK, compared to other economies. I think it's a shame that policymakers don't see the value of the power of the consumer to drive economic improvement as much as they do. They'll often talk about, and it's perfectly valid, trade is very important, government investment is very important, but consumer spending is one of the most important engines of any economy, and credit is essential to that. So why don't we have policymakers thinking about, credit availability and credit affordability much more than they are actually doing? I mean, credit is a good thing in society. There's a lot of people, in order to improve their standards of living, would never be able to afford those big ticket items if they simply relied on from one month to another, whether it's buying a house or at the largest level, or getting a car, or white goods, or refurbishment, or decorating, or whatever it happens to be. Credit is a good thing for improving standards of living. It's well governed, but it is currently, there's a lot of cost of compliance, there's a lot of regulation. That's reducing the investment by others into the consumer credit space. And I think there's a lot of attention that the Chancellor and the Treasury ought to be looking at that.
I mean, it does feel sort of, I mean, particularly since COVID, everyone was nervous during COVID and a lot of lending kind of stopped because we didn't know quite where it was going to go. But it doesn't feel like it's picked up to almost like pre-COVID levels in terms of like, if I go out in the industry and sort of like new acquisitions and the focus on new acquisitions, it's not like it was pre-COVID, although it's sort of picked up a bit, and that maybe doesn't quite flow through to the back end kind of volumes as well. But it feels like it's more stagnant than it was. I mean, that's what I feel. And then people are sort of like increasingly people have had issues with cost of living, I suppose, and maybe sort of going into like with inflation, going to slightly new sectors. Really, it feels like it's in this almost like stasis mode. I mean, that's what I feel when I talk to people.
Yeah, I mean, I think that's right. It's not in a catastrophic position, but it's not really giving people the chance to say, okay, I want to move on. It's like conversation going on about things like stamp duty in the budget. How do we help people move around to get the better jobs that they want to do, or the career opportunities? I mean, the budget, I think, at the end of November is going to be quite crucial in terms of assessing, is this something where the government recognises that the real economy and consumer credit, it's part of that, does depend on a positive, supportive environment for firms to operate, for firms to offer lending, or are we just going to go down to try and sort of add more and more costs to organizations that are trying to do this. And so they end up responding and reducing the sort of affordability and availability of credit again. You can't just keep loading on these costs to a sector that is already very wary.
I mean, when we talked a bit about regulation, we talked about the economy, I suppose, and the regulators had a very positive role in terms of customer treatment and those kind of things. At what point does that become too much when you're talking about cost? Where, for example, one of the things that's coming up is the product sales data changes that are coming through. I mean, that's quite a big change for folks. There's legislation coming through all the time that keeps on changing, new regulations that keep getting announced. When does that become too much for the sector and becomes burdensome? Some might say it is already, but what point becomes a tipping point, do you think?
Well, I think give you sort of some examples here. I mean, we've seen a lot of conversation this past year about the anxiety of investors in our sector about potential redress and liability for redress. So if they invest in the sector, they find that something happened in the book, 20 years ago or whenever that happened to be, and then suddenly they're landed with a mass redress sort of environment where the liability is going to land on them. I mean, that deters a lot of investment. Some of the claims management companies are harvesting vast numbers of claims to be put in. I mean, we were very close to motor finance keeling over, and we still found a very, very hefty approach being taken by the FCA on that one. That's not my sector, but all of that, rattles around because everybody will think, well, which sector will get hit next by either the sort of weaponizing of the arrangement. I mean, it's inherently unfair to me, anyway, that whether a firm is innocent or guilty, it's still, if a claim goes in from a consumer, they still have to pay the fee, this £650 fee, regardless of whether they're completely blameless or not. Now, that to me is massively unjust, and there's a big deterrent. That's not the way that a complaints process ought to work. If a complaint is justified, absolutely pay the fee, pay the compensation, quite right. But if it's not, it's prone to being weaponized externally. And so I think there's a lot of changes that need to come. And of course, the government have promised reducing cost of regulation by 25% by the end of the Parliament. Well, we had the regulatory action plan from the FCA last week. I still haven't seen significant steps in the direction of reducing that cost burden on our sector. It's not just our sector, it's financial services more broadly. The British economy depends on a healthy financial services sector. There's one of the sort of jewels in our economic crown, really. So we have to get this stuff.
And you mentioned before a little bit about the budget. Obviously, the budget's coming out. It feels like this is going to be another big budget for us here. I mean, and especially given some of your background, rather than actually asking about the budget itself, I wanted to ask a little bit about what's going through the mind, do you think, of the people in the government just around how to balance that? I mean, you usually have a good insight kind of on that. I mean, obviously there are things that can impact our sector. You've talked a bit about those already, but it'd be kind of what's the balancing act you think they've got to kind of keep?
Well, I mean, the problem is that it's not just about managing the economy. It's managing a lot of its political survival. So, right now you have a very fractious populist political environment on all sides of the spectrum. And you do feel a little bit as though the government's slightly buffeted around in this. It's a dangerous situation if it looks as though a government isn't capable of making tough decisions, particularly on expenditure and managing spending, because that then sends the signal to the bond markets, and then your price of government borrowing goes through the roof. There's a bit of respite, I suppose, because people are maybe saying, well, interest rates might come down a bit quicker than they thought, but that's sort of, very short-term sort of situation. But yeah, I mean, fundamentally, I just don't think it was necessarily a good decision to raise business taxes in the way that were raised, which then slowed down business, which slowed down growth. And guess what? It didn't generate the revenue that's needed, so they have to come back for more. And it does look as though it's going to be a tax-raising budget. And that's very difficult politically as well as economically. And that makes it very hard for all the politicians involved, because nobody wants to have to take the flak for that. But you do need a political situation where you can make tough decisions If you don't have that, I mean, you just look at what's going on in France or elsewhere, where any attempt at a difficult decision overthrows a government. And, all around the world, we've got very difficult and growing unsustainable fiscal situations. So, we've got to avoid being in that position.
It does say if you look around the world, there's a big rise in populism around the world. What do you think's driven that? Because that feels like there's been quite a change from even 10 years ago.
Oh, I mean, who knows? I mean, it's social media, it's availability of, low attention spans, lack of understanding of difficult decisions when they have to be taken. A lot of people want character in their politics these days. They don't want, they sometimes feel sort of, they listen to politicians very mealy-mouthed, conversations. And so those politicians who can be plain speaking will tend to appeal much more. Whether they can then govern is a completely different matter. You tend to think that a clear and crisp answer doesn't necessarily mean that you're going to have good governance. But I think that politics has changed, and people want to know genuine truth based in the values of their representatives. And if you don't know what the values are of those representatives, you suspect them. And that is one of the problems that a certain generation of politicians haven't quite grasped.
I mean, I suppose the danger for us in coming back to the sector is if you have popular kind of positions or even anecdotes that are out there, they become very visible, and that's sort of like what we like from a social media point of view. But that can then result in a reaction, which is legislation that might not be the right thing that's supported by the data, which is, I suppose, is the danger for us as a sector, even in terms of like some of the anecdotes you were talking about. And I suppose it's like, how do we get our arms around that? Because it feels like that's almost like a train that's sort of running out of control to a little bit, or at least has danger to.
Yes, I mean, there was a story a couple of years ago, which was in one of the main national newspapers, about a sector, not in consumer credit, different sector. Hidden camera individual was filmed basically mouthing off and doing things they shouldn't do, and bad behavior. But it basically resulted in that entire sector pausing all of its activities for pretty much a year. And now you've ended up with a far bigger problem in terms of rectifying that, all because of a media story on a particular anecdote. And I think we have to be careful not to have politicians and regulators buffeted around by particular stories. You need long-term stable policies that allow companies to plan and invest. But if there is this anxiety that something's going to change, things like consumer duty, things like retrospective redress issues that could come from regulators, if you're an external investor looking at putting your nest egg into consumer credit in the UK, you need to know that you've got certainty of investment. And anything that's, puts a big question mark over that because you think it might be quixotic in the way it reacts, that's just going to deter things. And we've seen that recently.
So if we look at, I suppose, looking at the end of this year and into 2026, I mean, what are the things that are sort of like top of mind that you've got within the CSA in terms of your mind, sort of like things that have happened and the things we've got to have on our radar screen, particularly for next year, the things that the members have most got to keep their eye on?
Yeah, I mean, there's quite a lot going on. We've got some big things on the horizon. Just consultations close on things like financial ombudsman service reform, where the Treasury are going to go with that one. We've got the Consumer Credit Act reform process, CCA, which is an old 1970s piece of legislation, and what's going to happen with that. Although, of course, if the powers just shift across to the FCA in an informal sense, you open up another question about, well, who governs the regulator? But I think the more front-footed issues are to do with what can we do to improve financial literacy amongst the general public? What can we do to encourage engagement and dialogue? And there are certain things I'd like to see a bit quicker. For instance, on credit reference agency stuff, the credit scoring system, I think needs to be more sophisticated and sort of reward individuals who are trying their best to repair their credit rather than treating anybody who's missed payments as though they've done it deliberately or whether they're trying or not. I think it's very crude right now, and we need to speed up some of that reform. So there's lots we've got to work on. And as a trade body, we try our best to represent members and give them the forum and a network to have these conversations and think about campaigning on these issues.
Yeah, well, as we were chatting before we started, there's no shortage of things going on, that's for sure. So keeping up with it is often the problem. When I meet some of your team, it's almost like they're just like, well, I've got to get onto this. I've got to get onto this. There's a new consultation that just come down. So there's no shortage of stuff to do, that's for sure. Chris, thanks very much for making time. Really appreciate it. It's always great to chat and get your view on things and how things are evolving within the space. So really appreciate it.
No problem.